What's up, everybody? Morning. 11:56 a.m. Eastern Time. How is everybody doing? We're back on the channel. Welcome back. This is my channel where we talk about in this segment about stocks. And I just want to make sure we're all good in terms of volume. So give me a sec, guys. So we're good. We're good. So today is definitely an interesting conversation. Like my title says, I'm going to share with you guys what I'm basically doing for 2027. I'm getting ready right now with the portfolio. And obviously, this is about the public portfolio, but it's making me look at how we're going to grow from. Because currently, if you look at the public portfolio, we're now. Hold on, why is it coming up? Give me a sec, guys. Yeah, okay, just popping it open for you guys. Give me a sec. How's everyone doing? Let me know in the chat. There we go. So that's the. I hope everyone's doing well. So it's $11,404 right now, right? And what we're gonna do basically from now on, we're doing more research. So first of all, disclaimer: I'm not a financial certified advisor. I can't tell you what to buy, hold, or sell. What I'm doing is I'm showing you what I'm doing in the market in the public portfolio. I've been investing in the stock market since 2015, since my days of Dubai, and then coming to New York in 2019. And now I'm in sunny Sunshine State, Florida, South Florida. So without further ado, let's get into it. So what I'm trying to basically say is that I'm looking at aspects, category sectors that I want to take this portfolio going in. Right now, the portfolio is mainly tech heavy, but it also has FPUT. It also has, let's look at it, right? So today we are up about 1%, $159 in the baby portfolio. We were buying these guys, they're up today 9.6. So let's look at the bottom first. Give me a sec. Here we go. So if you guys don't know what VX is, VXUS is basically the non-US stock market, right? It's an ETF, it's tracking that. So I'm trying to diversify the public portfolio as best as I can. We don't have a lot in this right now. We'll be adding, you know what? I'm just going to add another 10 today. And that's how you buy on Robinhood. And all my links are below the apps that I use. The reason that I'm not affiliated with any of these companies, but the reason that I'm actually using Robinhood because it's just mad easy to iPhone mirror and show you guys, right? And this is the only portfolio that I could get out of all the crypto, put it in Coinbase, and start from scratch to show you guys. So we started this portfolio just so you know, FYI, early on this year with $1,000, and now we're cooking. I mean, we're still. If I show you guys the max time on this Robinhood portfolio, it's because it's down because I took out the crypto at when it was like I basically took the loss, right? But I moved it into my Coinbase. That's where all my crypto sells stays. So yeah, so these guys were like 20 and 30% down. Like they're going up right now, which is good. I'm gonna run these new plays, the quantum ETF, the Marvel, NBS, Semiconductor, COHR. Let's leave SpaceX for now because there's not much in it in this baby portfolio. It's just got some skin in the game. LBRT is the energy play, and that's what today's chat's about as well. It's about where we're gonna look into the sector of growing this portfolio, right? 27, 28. Because as a long-term investor, I want to see what's happening, and I'm using what AI tools I'm using to look at it. Besides talking to my friends who are millionaires and multimillionaires and etc. etc. But also how I use AI to basically manage my portfolio, the public portfolio, right? So if you guys saw the last couple of videos on my channel, this segment is basically when I go live. These guys were like 20 or something percent. That's crazy. I mean, yesterday SpaceX, forget SpaceX because that's a long-term play. When I say forget about it, today we're not going to focus on SpaceX. What we're going to focus on are these sectors that I'm going to show you guys. So without further ado, let's get into it. So this is what I want to show you guys, right? So we're using, as you can see, Google Finance, right? And it's pretty clutch if you use it the right way, in my opinion. So I'm just going to ask it here, like, we're going into 2027 and further 2028. Currently, this is how my, and I'm just showing you guys, like, this is how I'm using stuff like this, these AI tools right now. So what I'm going to do is basically um, go back to the Robinhood, and I'm just going to take screenshots, and you'll see what I'm doing. I'm going to drop it in. So literally, I'm taking a screenshot of the app as we speak. So let me just show you guys what I'm doing. Literally, okay, this is what I'm watching. So, and you guys could do this as well, right? So we're going to take some screenshots of this, right, with buying power in it. Then I'm going to do this. The thing is, I'm just giving it the names that I'm investing in right now so it gets an idea. The best way you would do this is obviously open each, like for example, open this, and then I would share this as well with them, with the AI, with them. So, and I'm just giving it like a little, I'm just giving you guys how I'm actually using these AI tools, right? At this point in time. Okay. Now let's go back to Google Finance. Now in Google Finance, I'm just going to click upload file, going to go recents, all the screenshots I took just now, just making sure they all the correct. Oops. Give me a sec. I want to just make sure they all the correct screenshots. Yep. So I'm just going to give it this for now. Let's see what it does. We're going to 20. This is how my portfolio that I started year to date on Robinhood, right? What sectors should should I focus in to grow, to keep growing? Let's put it that. Let's see what it says. So this is Google Finance, right? If you guys don't know, mention up there. Okay, so what it's saying right now, based on screenshots provided, you have established a well diversified growth oriented portfolio with a strong foundation in large cap technology and broad market ETFs. As of July 21st, 2026, which is today, your portfolio current focus is heavily weighted toward high growth tech and semiconductors, balanced by foundational ETFs like POO and SCHD. To maintain growth through 2027 and 28, analysts suggest looking beyond this initial AI boom toward sectors benefiting from physical implementation and broader economic reindustrialization. Wow. Current portfolio snapshot, your holdings already include several best in class growth names and broad index funds and so on. I'm not going to read out everything, but yeah, you could read it, screenshot it. First of all, don't forget to like and subscribe if you think this content is helping you guys. I target beginners investing because I'm trying to speak to a younger version of me, like JW, Jeremy Waller, in his younger 18, 19. But anyone can look at this as, uh, some sort of educational kind of knowledge or something, and look at it and say, like, okay, fine, you know, I'm never invested. This is a way that I would want to. So that's what I'm trying to get at, right? A younger version of me or someone who's never, or JW started investing today, right? That's what this portfolio is about. Like I said, disclaimer, I'm not a financial certified advisor. I'm just been in the market since 2015. So sectors to focus on for 27, 28, to keep growing into 28, consider diversifying into these areas that are projected to see structural growth. industrials, and defense. First of all, do your DD, do your due diligence. This sector is currently a top performer in 26. Analysts are bullish on industrials due to the AI fueled data center build-out and mega trends like decarbonization and reindustrialization. AI infrastructure and physical robotics. While you own chip designs, NVIDIA, the next phase of growth is expected in AI infrastructure. The physical data centers, power systems, and networking needed to run AI models. Cybersecurity is also considered a non optional infrastructure for this transition. Healthcare and biotechnology, AI driven healthcare and genetic research are expected to grow strongly through 2028. This includes advancements in personalized medicine and medical robotics, which saw a 91% installation increase recently. Wow. Financials, although sensitive to interest rates, some analysts include financials as a preferred sector for 2027, provided economic resilience continues. So let's talk about these. What sectors are we currently in? Like if you look at the portfolio back again, guys, in financials, right? We are already in the portfolio. We are at, so this is what I consider my financial sector in over here. So far, American Express, Hood, right? So far, it's already up 2 point something percent. American Express is about 11% up, and Robinhood is about 32% up, right? In this portfolio, guys. So from that sector, we're already in there. So let's go back to the Google finance sheet. Okay, cool. Now, obviously, we know what we are in AI. So let's go again back into what we about in the semiconductors play. So we are in just having NVIDIA. Obviously, the AI is Meta, Google. So we're up NVIDIA 11 point something percent, Meta 8 point something percent, Google 9.4%. And these are like SaaS stocks, Microsoft and stuff. So I'm not looking at, although there could be an AI as well because they have their own Copilot and everything. So we're kind of there as well. Obviously, AI, all these big companies, NVIDIA and all, are sitting in these ETFs as well. CRM is some sort of AI service now. These are SaaS stocks, right? I think that's about it. And then we have in memory in this ETF. Okay, so let's go back to the Google Finance. So I'm showing you a glimpse what we're already in. Okay, healthcare, like you guys know, we are in Eli or Eli Lilly, or however you pronounce the pharmaceutical company. It's already in here. We don't have a massive position in it. Um, Only because, like I said, this is a baby portfolio. I'm building it out with you guys from scratch to become uh, a baby that can crawl, run, jog, whatever you want to say, not in that order, but baby, crawl, jog, run, and so on, right? So where is Eli Lilly? It's right here. We don't even have a share at this point in time, and we're building it out because right now, so we're just dollar cost averaging TCA every week. Um, and we're just gonna let it play. And this portfolio is only $93, and we just let it. So every week it's buying $10, right? If it dips harder, I have some buying power in this app, or I'll just send, right? So going back to Google Finance, that's what I'm giving you a glimpse of the portfolio that I'm putting into from these sectors. So let's go on right now, and then Google Finance kind of does this thing. It's comparing the S&P 500, the State Street Technology sector. These are all ETFs that, honestly, if you don't know anything about ETFs and you want to go to ETF, just understand these tools, use them properly, and see what you need. They also tell you what companies are in these ETFs if you ask the question. So, growth strategy for the next 2 years with the public portfolio. Monitor the tech rotation. Market leadership is becoming more diversified in 2026. Real economy stocks, industrials, energy, consumer defensive have occasionally outperformed tech. Focus on quality. Look for the best in class companies with recurring revenue and deep competitive moats to navigate potential volatility. Address performance gaps. You have some holdings currently showing double digit losses. Example WQTM, Marvel, COHR. Review if these companies still fit your long term 2028 thesis or if they have been overtaken by competitors. Now, I'm running these plays till the end of this year and then I'll make a review. whether I need to amend or consolidate, right? But that's what I'm doing with those. Sorry, let me just have a sip of water. That's what I'm doing with the new place. The other ones, I'm gonna keep it running, right? Um, and basically, then it asked me what is the analyst consensus for NVIDIA and MS. For we could run that. I just need to click on it, right? Which industrial stocks are benefiting most of AI data centers? How does the SCHD ETF perform during the market rotations? Should I rebalance my semiconductor holdings for 2028? Now, I don't ask that question because obviously, with AI and everything running right now, I want to be in that high aggressive kind of growth, right? And obviously be safe in some sort of extent, right? Like I want to make sure that I'm buying the great companies at dips, right? That's what I'm trying to say. So let's look at the first one, what it's saying, because that's pretty interesting. I want to see what analyst consensus for NVIDIA and Maxos. So we click on it, retrieving portfolios. So as of July 21st, 2026, both NVIDIA and Microsoft maintain a strong buy analyst consensus. Analysts remain bullish on these companies as primary drivers of AI and cloud computing infrastructure heading into 27, 28. Strong buy, right? So buy recommendations, analysts. So, and you have to understand like all of this data that you're looking at and reviewing and researching, you also at the end of the day use this, right? Use this. Use your brain, your knowledge to make the best where you want to spend your money, right? And this is how they're comparing within each other or with each other, right? So, strategic outlook for 2027. NVIDIA. Analysts anticipate NVIDIA will maintain its dominance in the data center market with an average price target of 309. Currently, NVIDIA is at 206, 206, right? 309. The market expects significant growth as the physical reindustrialization of AI data centers continues globally. Microsoft, the consensus reflects confidence in Microsoft's ability to monetize AI through its Azure cloud services and software stack. Analysts see an average upside of nearly 39%, with some targets reaching as high as 680. Wow, currently it's 397. Madness. Right. So we also want to know so if you guys follow me on IG, I put out a post last night that we might be adding this in the private portfolio. I was looking at what Mr. Warren Buffett is adding to his plays and his percentages, which you can find online as well with AI. So one of these. So if you don't follow me on IG and you want to know what I'm buying and selling in my private portfolio, follow me on IG. The links below. So Oxy, right? Can you share your deets on this? So as of July to that's today, Occidental Petroleum, ticker symbol OXY, is viewed as a high quality value play within the energy sector. Now, if you remember, if you just joined the stream a couple of minutes ago, Google Finance was saying these are the sectors that we are gonna that it thinks it's gonna grow in 27, 28, right? So also we just got this mic, so I want to know if y'all can hear this noise. Obviously, I'm gonna watch my video back and see if because someone's mowing the lawn or something down. So this condensed mic, hopefully by the company Elgato, comes in clutch, the Wave DX. Uh, so yeah, going back to what I was saying. So let's look at Oxy. So analyst ratings and targets. The current analyst consensus for OXY is a buy. Average price target $64.71, implied by 7. Wow. Target low is of 55 and a high 75. Sentiment out of 17. Analysts 7 recommend a buy, 41%, and 10% maintain a hold, 59% with 0 sell ratings. Cool. Key details for 27, 28 to sustain growth through 28. Oxy is focusing on re-industrialization, its balance sheet, and maximize secondary recovery. Now, I'm no Warren Buffett, but I like to see what he does because I kind of copy paste it sometimes. And it's worked in my private portfolio. So I'm trying to bring in some sort of examples of that, what I've done in my private portfolio over the years from 2015, and bring it in the public portfolio as well, right? So balance sheet repair management is rapidly deleverage, deleveraging, having reduced principal debt to 13.3 billion of May 2026, with a near-term target of $10 billion. Reaching this target is expected to unlock larger share repurchases and dividend increases by 28. So obviously, if you invest in this company, it's also paying you dividend, which is a great thing. Permian efficiency, Oxy is achieving record production, wow, 800, while reducing capital spending through enhanced, well-designed technology. Carbon management. So if you remember, they were talking about carbon management in the earlier bit. Google was talking about it, right? The finance about these are the sectors and etc. The company is a leader in enhanced oil recovery using CO2 injection to potentially recover up to 20% of oil and share reservoirs compared to the standard 10% dividends. Oxy recently increased its quarterly dividend by 8% to 0.26, well, 26 cents per share, right? So what are we going to do? Let's understand the risk first. Risk to watch. Oxy remains highly sensitive to commodity prices and recently scrapped new hedges, leaving its 2027 performance fully exposed to spot oil prices, a sustained drop in crude below $60 per barrel. So, what I want to ask is basically, and even here, Warren's company, Mr. Warren Buffett company is mentioned here. Anyway, so what I want to ask here is, with all the geopolitical issues with Iran, if I started some skin in the game with this company, Oxy, does that have any implication? So you understood what I was trying to ask. Let's see what it says. So the ongoing conflict with Iran presents a double-edged sword for Oxy. While geopolitical instability often drives up oil prices, potentially doubling OXY's free cash flow, it also directly threatens the company's specific operations in the Middle East. The skin in the game implication. Investing in Oxy during this period involves balancing two primary forces. Potential upside, the war premium. Oil prices have already surged significantly in 2026 due to the conflict, with Brent crude breaking the $100 per barrel at various points. Analysts suggest that if the Iran conflict escalates, Oxy could potentially double its stock. Wow. If the Iran conflict escalates in 2026 and higher prices accelerate debt reduction and shareholders' return. Direct operational risk. Unlike pure domestic producers, Oxy has a significant footprint in the Middle East, including co-operation in Oman, Qatar, and the United Arab Emirates. That's where I'm from. UAE. That's where Dubai is. The war has already forced Oxy to trim its international production outlook as tensions weigh on regional operations. Strategic buffers. Oxy has several protections that might mitigate these geopolitical risks. Permian Basin Fortress, roughly 85% of Oxy's global crude output comes from the US, primarily the Permian Basin. This domestic focus acts as a massive hedge against the physical disruption in the Middle East. Buffett backing. So, yeah, this is what I mean, right? Warren Buffett backing. The company is frequently referred as to the Buffett backed fortress, with Berkshire Hathaway maintaining a significant stake that provides a perceived flow for long term investors. Debt reduction. Oxy has been aggressively paying down debt, reducing principal to 13.3 billion as of May 2026, with a target of 10 billion. A stronger balance sheet makes the company more resilient to temporary production stocks. And then you have all this other data. So let's ask this question to Google Finance. As you are aware, we started this chat with what sectors I should be looking at with this I want to see if this OBS is picking up this. Well, I don't see anything OBS is picking up right now on the because that lawnmower is going back to it. As you're aware, we started this chat with what sectors I should be looking at with this portfolio in mind. Coming closer to 2027 slash 28, would this be a good investment to start with? Equals Oxy. Question mark. Let's see what it says. And guys, this is just one of the AI tools I use to do research, right? It's not just Google Finance. I used to use TipRanks. But yeah, there's so many out there as of now. Like you could just use your traditional uh whatever AI bot or chat or Gemini or whatever, right? Claude. So yeah, let's get back to it. So Oxy aligns with the physical reindustrialization and AI infrastructure teams discussed for 2012, but it serves a different role than you're currently. So what I want to go back to, give me a sec. I want to open up the Robinhood and put in another thing that I have there before we get into the chat again. Now I want to show you this. Where is it? This one. Okay. So I want to also go back to this Liberty Energy. So let's come back to it. And I want to share more details with Liberty Energy. With so I'm going to take a screenshot of this part. All right. Let me just say this part and see what happens. Okay. So let's come back to that. So we're back into Google Finance sheet. And so why Oxy fits your 27-20 strategy, energy infrastructure to fuel the AI data center build out you already invested in NVIDIA and Microsoft. The world requires massive amounts of reliable energy. Oxy is a low cost producer that benefits from the structural demand. Balance sheet transformation. Oxy is the final stages of a multi year debt reduction plan. Analysts expect that by 2027, the company will have shifted from repair mode to return mode. So, all these key points that when I'm listening to, at the end of the day, it's my decision, right? It's my money. Whether I'm not trying to gamble my money here, but as a business, and this is what I look at each companies as an investor, right? If they're not performing and I've given it its sufficient time, I have to take my losses. But then again, with filing taxes every year, you can obviously rotate your losses against your gains, so you don't have to pay up a good capital tax. So look at these avenues, right? When you're thinking about rotating money or whatever, right? But give it enough time. Just because the market's dipping doesn't mean so. Always make sure you're doing your due diligence, right? So anyway, balance sheet transfer. So I think we read that. Oxy is the final. Yeah, we did. Geopolitical edge with ongoing tensions in the Middle East. Oxy's heavy concentration in the U.S. Permian Basin minus 85%. What is this? Not minus 85% production makes it safer energy play that international majors. Metric consensus rating buy. High target 75, 7 buy. So that's what's given out. Okay. Strategic consideration for your portfolio. If you add Oxy to your current Robinhood holdings, diversification, you would be adding energy to a portfolio that is currently over 60% technology and semiconductor. Volatility buffer. Energy often moves inversely to tech. When tech stocks pull back due to rising inflation or interest rate, energy stocks like Oxy often rise, which is a good thing. So we want to diversify because we are in tech mainly. And the reason why we're in tech mainly is because that sector is high growth, right? At this point in time. We're all consuming more. So tech's winning. Berkshire, in my opinion, Berkshire Flow, Warren Buffett continuous ownership provides a perceived stability that your higher volatile names like Marvel may lack. So that's another thing, right? Summary for 2020 Horizon. Oxy represents a transition from pure growth speculation to a more matured cash flow driven investment that hedges against the very inflation that can hurt your tech stocks. So great. Summary for 2017. Oxy represents a transition from pure growth speculation to a more matured cash flow driven investment that hedges against. So I think we're going to start a small play in Oxy in the public portfolio as of now. But I do want to ask it What do you think about this? Comparing to Oxy as in sector. So let's upload that file. Last one. Yeah. Comparing Liberty Energy. Let me just go back to Robinhood to make sure that's open. So yeah. So comparing Liberty Energy to Oxy reveals two different engines within the energy sector. While Oxy finds and pumps the oil, LBRT provides the high-tech machinery and engineering needed to get it out to the ground. Great. That's what you want. So obviously you can either pause the video and read all this or take a screenshot if you're on your phone. Is LBRT a good analysis for your 28 horizon? LBRT offers a unique bridge between your existing tech portfolio and the energy. The AI data center in July 20th, LBRT announced. So obviously we are in this for the long play technological lead. LBRT operates one of the most efficient low. Okay, I like to analyst outlook. As of July 26, analysts have a moderate buy consensus on LBRT with an average price of 32 implying. So like I said, guys, if you want to track some companies and you just don't want to watch it, you can also just buy a fractional share of this company or one share, whatever it needs, depending on your pocket, and track it. That's what I do, right? I always do my research and then I'm like, okay, let me get into the play. Let me ask my circle, guys, my friends who are like multi-millionaires or multi-millionaires, how they say it here, or millionaires or whatever, right? And I'm like, guys, what are you all doing in this? And we all share, we're good friends as well. So LBRT is your infrastructure engine. It grows as long as energy companies like Oxy keep spending on technology to improve, so, which is a great thing, right? So, and here it's comparing the two, LBRT and Oxy from September 2025. Oxy is being the orange one, so Oxy is here, and LBRT is outperforming it. And they give you all these data as well. So, one would say, based on the portfolio, would you add more Oxy right now? Or would you get into Oxy right now or add more LBRT? Where I'm at right now, I think we're still in a stage where I would, because this is a baby portfolio, right? I would actually add more into my LBRT because I like the where it's at this point in time. I already have a starting position. We already just have this, and we keep on adding. So today I'm gonna just put 20 in it. Like I said, guys, this is a baby portfolio, and I'm trying to build it in today's time, right? Uh, this is not my private portfolio. So these stocks, again, I'm not too concerned about the ETF with the quantum computers or quantum companies, right? Because I do believe that from what I know, that quantum will be the future of computing. However, we're still some time out. Marvel, NBIS, COH, I might reduce something over here and rotate it in LBRT and Oxy soon. I'm not getting into Oxy right now. I did speak about LBRT in when we got into this place some time ago in an earlier video, but I have Oxy on my radar. I want to have more energy because I just have LBRT as energy here. So, but at the same time, I don't want to get both in. And if you look at Oxy, let's look at that before we end the chat. If you look at the 3 months growth, it's 3% up. Year to date is 36% up. 1 year is 28%, 5 years 130. So we started this portfolio 1 year ago, it's 28%. So if you got into Oxy in the past year, actually, we started the portfolio year to date. So we would be up 36%, which is amazing. So back then, the low was $40. How do I look at when to buy this company? So let's look at 3 months ago. I want to get in here. When you see in the chart on top here, it says low $49. I would love to pick it up at that. So anything below 50, I would like to start a position and keep adding, right? That's 3 months ago. Year to date, The lowest it hit year to date was again $42. You can see up here. So if I'm starting a position, I'm going to start a position when it goes below 50 FII. But that's just me. You do your own DD. Guys, I think I'm going to leave it as that for today. This is how I use all these tools to make my decisions on not just in the private portfolio, but also when it comes to the baby portfolio, the public portfolio, right? And if you're not chatting to friends, if you're not using AI tools to grow your portfolios, it's amazing. If you literally share data with it, you know, you could also, if you look at Google Finance right here, you could start creating a portfolio with and adding everything that you're in, taking screenshots, updating in whatever app or brokerage you use, right? You could use these tools to make it happen. Guys, on that note, I'm going to take your leave. The wife is away, so obviously Mr. Pedro, who's snoring just below me, our dog, the French bulldog, is getting older and he loves more attention nowadays. So gonna play with him for a bit because he misses his mom. Got to eat lunch, and I got a meeting at 2, and then we got to be at the boxing class at 4. So guys, keep investing in yourself, bet on yourself. You're the best bet is betting on yourself. Be smart out there, make the right decisions. Um, Comment below if you think this was a great video and if you want me to look at some other stuff from a beginner's eyes point of view. And if just comment, let me know. Like, subscribe, do your thing, make it happen, own it. Peace.